You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 30th day of September, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. There's no credit card required. You get 5 consecutive trading days. The weekend doesn't count against you. And you're not just getting access to the live training room, you're getting access to everything we offer. We treat you just like you were already a member for 5 consecutive trading days. Keep in mind, we operate around the clock, and not just 2 hours in the morning and 2 hours in the afternoon. We are open for business from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. So again, no credit card required. You have access to everything. We'll get your indicators up and indicating today. If trial will officially start tomorrow and will run all the way through next Tuesday. So again, at 1 p.m. Eastern, about 1 hour into this broadcast, Michael will join us, and he'll walk you through the steps. Okay? All right. Now, when the live training room ends each day, we take a 30-minute break, and then come back for this broadcast, the noon broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour after the broadcast starts. before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network since 2005. But all you have to remember is youtube.com/CFRN. Not only do we broadcast live every trading day, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. This is our schedule for each afternoon broadcast. As I said, Michael will join us in about an hour for a recap of what happened this morning in the live training room and do a little live trading on the TradingView platform. But we'll start where we always do each day with our daily devotional. And the topic we're on right now, context matters. We're in day 4 of this topic. And today's scripture is Mark 1, verses 1 through 8. The beginning of the good news about Jesus the Messiah, the Son of God, as it is written in Isaiah the prophet, I will send my messenger ahead of you, who will prepare your way. A voice of one calling in the wilderness. Prepare the way for the Lord. Make straight paths for him. And so John the Baptist appeared in the wilderness, preaching a baptism of repentance for the forgiveness of sins. The whole Judean countryside and all the people of Jerusalem went out to him. Confessing their sins, they were baptized by him in the Jordan River. John wore clothing made of camel's hair, with a leather belt around his waist, and he ate locusts and wild honey. And this was his message. After me comes the one more powerful than I, the straps of whose sandals I am not worthy to stoop down and untie. I baptize you with water, but he will baptize you with the Holy Spirit. Again, that was Mark chapter 1, verses 1 through 8. So, Mark's gospel starts with the sudden appearance of John the Baptist. This figure from the wilderness comes on the scene wearing strange clothes, preaching and baptizing people in the Jordan River. Most Christians are familiar with John the Baptist as the prophet who pointed people to Jesus. But what do we make of all the details about him? The Bible rarely describes someone's clothing, so when it does, we can assume there is some significance. Mark describes John as wearing clothes made from camel hair, with a leather belt around his waist. John's ministry is patterned after the Old Testament prophet Elijah, the prophet who God would send before the day of the Lord in Malachi. Elijah in 2 Kings 1:8 is described as wearing a garment of hair with a leather belt around his waist, matching John's appearance here in the New Testament. Mark is intentionally portraying John as the Elijah-like prophet that God had promised. Why was John coming from the wilderness? This detail also refers to John's prophetic role. Just before introducing John the Baptist, Mark quotes from Isaiah 40, verse 3. A voice of one calling in the wilderness, prepare the way for the Lord, make straight paths for him. John is seen as the fulfillment of this prophecy, coming from the wilderness and preparing the way for God in the person of Jesus. Even the location John chose to baptize people in, the Jordan River, held significance. Elijah parted the Jordan before taking up heaven in a whirlwind in 2 Kings 2, 5 through 12. Perhaps more significantly, the Jordan River is where the people of Israel crossed from their wilderness wanderings into the Promised Land in Joshua 3:4. Crossing the Jordan signified a new stage of God's promise to Abraham being fulfilled. By baptizing in the Jordan, John was preparing the people for another new stage of God's promises being fulfilled. The coming of Jesus, the Messiah who would take away the sin of the world. Let's pray. Heavenly Father, thank you for sending John to prepare the way for Jesus. And thank you that through Christ we have the hope of salvation. Help us to repent, to turn from sin, and to keep our hearts ready for your presence. May our lives point others to Jesus, the one who baptizes us with the Holy Spirit and power. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 106 points. NASDAQ is down 46. S&P 500 down 9.5. The Russell 2000 down 18. No movers or shakers there. The closest would be the Russell, which is down about 0.75%. When we go to the charts, you'll see it's actually a pretty quiet day. In the commodity basket, crude oil down another 60 cents today, trading 62.85 last. That's a drop of almost 1%. Gold up $13.90, trading 38.69.10 last. Silver down 56 cents, trading 46.45 last. That's a drop of almost 1.25%. The Asian markets at the close. The Nikkei fell 111 points. Shanghai rose 20. The Hang Seng gained 232 points, almost 1%. And in the European markets at the close, FTSE up 50. The DAX up 135. The CAC up 15. So we had a mixed day in Asia. It was a green day for the UK. And so far, it's a big red radio turnaround Tuesday here in the US of A. Truly a turnaround Tuesday. All right. We had some mixed markets yesterday. For the most part, green. But again, when we get to the charts, it'll all make sense. As it does. Congress must pass a federal funding bill by midnight tonight to avert the shutdown of all non-essential government operations. President Trump met with congressional leaders yesterday in a last-minute bid to break an impasse on a short-term spending measure, but disagreements remain. Earlier this month, the Republican-led House passed a stopgap bill to fund the government through November 21st, but the Senate rejected it in a 44-48 vote. Senators are set to reconsider the measure today. The House is not scheduled to return until October 7th. The Republican-led Senate lacks enough votes to pass the bill without Democratic support. Senate rules require 60 votes to pass a measure. Republicans hold 53 seats. Democrats are seeking concessions, including extending Affordable Care Act subsidies, reversing Medicaid cuts, and protecting previously approved state aid. The administration has warned of mass firings if the government temporarily closes, framing the lapse in funding as a chance to permanently downsize. Smaller government, I'm all for it. Electronic Arts, the U.S. video game giant behind Madden NFL and EA Sports, announced yesterday it will be taken private in a $55 billion all-cash deal. Imagine walking into your bank and saying, I need to withdraw $55 billion in cash. They call it an all-cash deal, but they write a check. Or they go to Walmart and get a MoneyGram. With Saudi Arabia's public investment fund into American private equity firms. The transaction is said to be the largest ever private equity funded buyout. The Saudi fund, alongside private equity firms Silver Lake and Affinity Partners, will pay stockholders around $210 per share as they take it private. Silver Lake is among the investors poised to oversee TikTok's U.S. operations, while Affinity Partners is managed by President Donald Trump's son-in-law, Jared Kushner. For Saudi Arabia, the acquisition will advance an ongoing push into the gaming industry as the kingdom seeks to diversify its oil-dependent economy. PIF already owns about 10% of EA and launched Savvy Games Group in 2021 to spearhead multi-billion-dollar gaming investments. The deal is subject to approval by the U.S. Committee on Foreign Investment. Lawmakers previously raised concerns about Saudi investments in American golf. Really? That's where you hit that little ball all around the green grass? I think there's more things to be concerned about than golf. Maybe that's a code word for something. It's got a little G. Looks like golf. Anyway. How many of you are still on AOL? Remember AOL? I mean, that was kind of I won't call it the birth of the internet. It's when we knew we were pregnant. Because In the AOL days, everywhere you went, convenience stores, gas stations, there were all these little CD-ROMs, and they were free. You could just pick one up and take it home. There was no real advertising or push. These CD-ROMs were just everywhere, mountains of them. You would take it home, you'd put it in the CD-ROM drive in your computer. When's the last time you used a CD-ROM drive in your computer? But you'd put it in, and you get your free trial of AOL. And for a few years, that was the internet. I mean, you could log on to AOL, and you could send emails, and you could kind of watch videos, and you could read the news, and you could participate in discussion groups. But outside the borders of AOL, there wasn't anything. Nothing was there. The info superhighway hadn't really been built. Today, AOL ends its dial-up service after more than 35 years. Wow. Time does fly, right? The decision announced last month marks the end of a service once synonymous with accessing the internet. When the company, then called America Online, launched dial-up service in 1989, it was among the first. Certainly the best known. The approach used a modem to convert computer data into audio signals, which could then travel over phone lines. The dial-up tone was so ubiquitous in the 1990s that it was considered part of the soundtrack of the decade. With the service inspiring Nora Ephron's hit 1998 rom-com, You've Got Mail. At its height in 1999, AOL boasted over 18 million subscribers with a market capitalization of $222 billion. And I can attest to the fact that in our database, we still have some folks with AOL email addresses. I've even asked a few of them about it, and they say, well, if it's not broke, okay. Except you don't need a modem anymore. Broadband internet overtook dial-up in the mid-2000s, thousands of times faster than AOL's 56 kilobits per second speed. Now, I remember when AOL first came out, I think it was 24 kilobits or something. It was about half of 56, whatever that number is. And when they bumped it up to the 56 kilobits per second speed, man, it blew our hair back. Wow. We were traveling the internet twice as fast as we were going where man had never gone before. It was 28. That's what it was. 28 kilobits per second. Yep. And all of a sudden, we got 56. We were flying high. Now, so much has changed, but still, roughly 163,000 Americans relied on AOL in 2023 to connect to the internet. A little over 0.1% of the U.S. population. The company today offers email, media, and data services. Now, we already talked about the shutdown, and it looks like this time it could actually happen. I know that's been said before, but a meeting today in the Oval Office doesn't appear to have lessened the chances of a partial government shutdown, with commentary from both sides into Tuesday suggesting no deal is in the immediate offing. We have very large differences, according to Senate Democratic leader Chuck Schumer, as he was leaving the Oval Office. Vice President J.D. Vance went further, saying in a separate appearance, "I think we're headed for a shutdown." President Trump himself followed up today, saying a shutdown would be the Democrats' fault and that he is looking to fire a lot of federal workers if a stoppage goes forward. The lack of progress, as well as a drumbeat of releases from federal agencies about how they will furlough workers during a stoppage, is boosting the odds of the first government shutdown since 2019. It is set to begin tomorrow morning at 12:01 a.m. Midnight tonight. That's it. Unless we get a last-minute deal. Such a stalemate could produce unpredictable economic impacts, some of which could be felt quickly and others that could grow with each passing day. Some effects are already in evidence in both currency and gold markets, but much of the market focus for now is on the government's economic data, which will cease being published if a stoppage goes forward. That comes as both investors and central bankers at the Federal Reserve are looking for all the information they can about the slowing labor market and persistent inflation ahead of another Fed policy meeting at the end of next month, the end of October. It's important to understand the U.S. economy is already on a knife's edge. The labor market has softened and inflation has risen. Adding a government shutdown to the mix certainly won't help things. Deliberations continue. Somebody will get creative. It's a big game of chicken. And we, the American people, are the splatter that's left on the road if nobody chickens out or comes up with a better idea. Boston Federal Reserve President Susan Collins said that cutting interest rates a bit more may be appropriate due to diminished threats of higher inflation and risks that unemployment rise. It may be appropriate to ease the policy rate a bit further this year, but the data will have to show that, Collins said in a speech in New York at the Council on Foreign Relations. She added, "I continue to see a modestly restrictive policy stance as appropriate as monetary policymakers work to restore price stability while limiting the risk of further labor market weakening." Collins wasn't the only Fed official on Tuesday to express new concerns about unemployment. The Fed's vice chair, Philip Jefferson, said he sees downside risks to employment rising and that the unemployment rate could edge higher this year before returning to a lower level next year. Keep in mind, we got plants, factories being built, lots of jobs are being created as money pours in from tariffs and foreign investments. Biden drove our economy into the ground for 4 years. It's a good thing he only worked like 2 days a week and only a couple hours a day. Imagine how much damage he could have done if he had showed up for work every day and worked a solid 8 hours. CoreWeave, CRWV, that's the symbol. Their stock jumped more than 14% this morning after Bloomberg reported that the company has inked a $14.2 billion deal with Meta. CoreWeave, the NVIDIA-backed AI data center operator, will provide Meta access to NVIDIA's GB300 server racks, which contain 72 of the chipmaker's Blackwell AI GPUs. They loved our infrastructure in earlier contracts and came back for more, according to CoreWeave's CEO. And on that news, CoreWeave is up. I can't see it on this screen. Meta's actually down a little bit. Nvidia's up 2%. Why can't I see CoreWeave? Must be over here somewhere. There we go. Yeah, CoreWeave up $17 on that news. Trading 139.72 last. Well, there's some happy shareholders. Pfizer will sell drugs at lower prices to the U.S. Medicaid insurance program as part of a deal with President Trump to advance his most favored nation's agenda, according to a report in the Washington Post. Interestingly, the fact that Pfizer is going to sell drugs at a lower price, their stock is actually up today, almost 5%. Go figure. From Reuters, U.S. consumer confidence declined more than expected in September amid mounting worries over the availability of jobs. Conference Board said on Tuesday its consumer confidence index dropped by 3.6 points to 94.2. Economists polled by Reuters had forecast the index dipping to 96. So, that was a swing and a miss. But it's probably just transitory, right? President Trump last night announced tariffs of 10% on softwood timber and lumber, alongside a 25% tariff on certain upholstered wooden products, also known as furniture, due to take effect on October 14th. This was the latest set of tariffs to be announced, impacting the furniture industry after Trump posted last week about a flurry of tariffs on kitchen cabinets, vanities, and other upholstered products that will take effect October 1st. So why is he picking on the furniture industry? Well, number one, it's a big hit at Canada. And we are the world's superpower. I mean, can we not build our own furniture? That's the whole point. Made in America, for Americans, used by Americans. Gold remains in focus after setting a fresh record high again today, as the precious metal is on track for its 7th consecutive week of gains. Recent buying in the commodity has been fueled by a softer U.S. dollar, ahead of an expected interest rate cut by the Federal Reserve next month, and mounting concerns over a possible government shutdown. A weaker dollar lifts demand for dollar-priced bullion from foreign buyers, while safe haven demand has increased amid the risk of a shutdown starting tomorrow or tonight at midnight, and unresolved geopolitical tensions in the Middle East and Europe. Price of gold has soared 45% since the start of the year, and 10% over just the past month, far outpacing the gains of major stock indexes. Spot gold was up slightly at around $3,850, and I gave you a figure just a few minutes ago. That was in real time. So the gold bull continues to run. Now, after this bigger run, there will come a pullback, there will come a retracement. But you know, we had two co-hosts on this show, John and also Dr. Tom. Both big gold bulls. And, well, I'm sad that they're both gone. I miss them both still very much. But their whole lives were about gold. And the fact that they're not physically here to see this, that's a little sad. I know many of you remember them both well. Oil extended a sharp decline as OPEC considers boosting the pace of output hikes in the coming months. We'll look at the crude chart here in just a minute. And U.S. job openings increased marginally in August while hiring declined, consistent with softening labor market conditions that could allow the Federal Reserve to cut interest rates again next month despite resilient consumer spending. Job openings, a measure of labor demand, rose 19,000 to 7.227 million by the last day of August. The Labor Department's Bureau of Labor Statistics said, the folks you can trust, in its job openings and labor turnover survey. In case you ever wondered what the JOLTS stood for, we get the JOLTS. We had the JOLTS numbers this morning, the JOLTS report. It's job openings and labor turnover survey. So you learned something today. Economists polled by Reuters had forecast 7.185 million unfilled jobs. So we have more jobs than they thought we would. Well, what about that? Diddy gets sentenced today. Some of you probably don't know who Sean Diddy Combs is, but many of you do. Federal prosecutors have requested a judge to sentence him to 11 years for his conviction on prostitution charges, saying he is unrepentant and that his accusers live in fear of him. The music mogul has been in a New York prison for the last 13 months after a jury convicted him in July on 2 counts of transportation to engage in prostitution under the Mann Act. He is set to be sentenced by Judge Subramanian on Friday of this week. He may be in prison, but I bet he's living like a king. And we'll end on this note. President Trump told a gathering of military leaders this morning they should use American cities as training grounds and described a federal crackdown on crime in major cities as a war from within. Trump addressed dozens of top generals and admirals in Quantico, Virginia, where he said defending the homeland was the military's most important priority. He signaled that the leaders in the room could be tasked with aiding in federal interventions in Democratic-led cities like Chicago and New York. They're very unsafe places, and we're going to straighten them out one by one, Trump said. And this is going to be a major part for some of the people in this room. That's a war too. It's a war from within. He went on to say, I told Defense Secretary Pete Hegseth we should use some of these dangerous cities as training grounds for our military. National Guard, but our military, because we're going into Chicago very soon. That's a big city with a very incompetent governor. The White House has already directed the deployment of National Guard troops across Washington, D.C. and Memphis, Tennessee, as part of an effort to quell crime in those cities. This week announced he would send troops to Portland, Oregon. We talked about that yesterday. All I can say is it's about time. This is America. Oh, come on. Really? All right. On the home front, Logic 247. That's our 24/7 around the clock E-mini alert service. You know, it was just came to my attention yesterday when we were doing some work that my cursor, which appears very large to me, by the time it makes its way through the tubes and all that and onto the U tubes, you can barely see it. So I got a couple little tools here. I don't know if this is any better. No, I don't think so. Okay, I got another little tool. The spotlight. I don't like that very much. I'm looking on my monitor to see if it's even catching up. Yeah, you can see that. Let me look on my other monitor. Let me go back to the arrow one. Let's see if that can be seen. Not really. Okay, so maybe we go. We could probably just leave it alone. I tried a couple other. It has to do with resolution. I know you can increase your mouse size. Maybe you don't know that. Just in the bottom left-hand corner of your Windows screen, where it says type here to search, just type in mouse size, and you can make your mouse as big as you want it. Well, you can make it as big as they allow you to make it. Anyway, Logic 247, that is our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. We're in week 374. Over the last 374 weeks, we have issued over 20,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern, so some of these numbers may have changed. She will, of course, update the recap this afternoon, early evening, as she does each and every day. At the time she did the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 28 alerts. We're still waiting on the outcome of 10. Some of those may have resolved themselves at this point. That gave us 18 actionable alerts, of which 1 or 6% would have been stopped out. Again, based on simple market structure and the simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to help you learn how to read a chart. Of course, you can all read, but when you look at a chart, there's no words, no sentences, no paragraphs, no punctuation. It's a whole new language. And if you're going to learn how to trade, you've got to be able to learn how to read a chart. Have you ever been reading a book? Yeah, they still make books. And you get to a really exciting part in the story. You reach the bottom of the page, and you're about to turn the page. That's why they're called page turners if it's a really good book. But in your mind's eye, you already know what that next page is going to say. Why? Well, 1, because you have a brain, and 2, because you know how to read. And it's really not that much different with trading. or learning how to read a chart. You got to learn to read the chart before you learn how to learn how to trade. So just as your mind can tell you, but it's not always right, is it? You turn the page, and some percentage of the time, it's not what you thought it was going to say. He doesn't really kiss her, or the bullet really doesn't hit him, or whatever the case may be. But what we've shown over 7 years now, 374 weeks, that's over, and 20,600 plus alerts. We've showed that we can know what the market is going to do most of the time, but not all the time. Remember, we've averaged 20% or less of the alerts being stopped out. Last week we ended up at 13%, and so far this week we're at 6%, but it's only Tuesday. Okay? So, whether you trade the alerts or not, make sure you use them to learn how to read a chart. Now, I see the problem with that red dot is every time I want to do something, I got to go back to this mode. So, now, 374 weeks, obviously a very long time. But long before, years before we had a Logic 247, we had our original alert service, the concierge trade alerts. And they're different in a number of ways. But number one, they don't come out around the clock like the Logic alerts. The Logic alerts can come out at 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Now, typically, the CTAs are published 5 minutes ahead of the Globex Open, which is 6 p.m. Eastern. So last night at 6 p.m. Eastern, it officially became the Tuesday session. Tonight at 6 p.m. Eastern, it will be officially become the Wednesday session. I didn't get them out 5 minutes ahead of the open last night. I got them out 1 minute after the open. And I put a little note because I was on a conference call when I realized what time it was. So I quickly typed into the discussion group, hey, going to be a few minutes late with the CTAs. But we got them out. I guess you could say we were 6 minutes late. Should have gone out at 5:55, went out at 6:01. What this means is all of our traders and even trial members had all of these targets 1 minute after the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go look at the chart and see what's up. I'll go to the bellwether, the S&P 500 E-mini futures, which is where we start. Now I know that my crosshair, you can certainly see that. So right where the crosshair meets, yeah, that's where the cursor is that you can't see. I may work out the resolution issue or not. I don't know. But anyway, we'll get through it. We've been doing it for years, apparently. Now, yesterday we ran up and touched red and fallen. And we closed well off the high of the day. So on Friday we found resistance. We talked about this all last week. Thursday we found resistance at the black step line. Actually, Wednesday we spiked it, but we had resistance, resistance, resistance. And then I did say on Friday, if we close at the high of the session, chances are Monday night, or yes, Sunday night when the market's open, will be above the step line, but we'll probably also have red and falling. And that's exactly how it panned out. And now, yesterday, what was resistance for 3 days, 1, 2, 3, the black step line, became support yesterday, and it has served as support today. And we have an inside day. We got this little tiny doji, okay? And when you see that, you know not much is happening. Obviously, with all the geopolitical tension, potential of the government shutting down, I'm really quite surprised to see that it's held up as well as it has. But still above the BBC, that's what the green line's called, and price always reverts to the mean. In our case, the mean is green. We call it the BBC. It just stands for bull, bear, cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Here's price crossing below the green line back in March. And here's price crossing above the green line in April. And we've been above it ever since. And every time price reverts to the mean, the pullback held, and it held, and it held, and it held, and it held. Needless to say, the pullback holds more often than it doesn't. All right. That brings us to the 30-minute chart. This is where all of the alerts are created, both the Logic 247 alerts and the Concierge Trade alerts. Nothing magic about 30 minutes, just the time frame I chose years ago. It's not broke, leave it alone. So we opened, this was the opening candle last night. Blue and climbing, that's support. So that pushed us right up to the BBC where we consolidated for quite a few hours. And then we finally broke below the BBC. You see where blue and climbing turned to red and falling? That's your heads up that things may be about to change, and change they did. They brought us all the way down to the short target. That was published 1 minute after the open. The short target was based off this low right here from yesterday. Not rocket science, just market structure. When the market finds support, it's always going to go look for resistance. When it finds resistance, it's going to look for support. Back to resistance, back to support, back to resistance. Now the vertical lines separate today, Tuesday. Here's Monday, back here's Friday. But these are this week's weekly trading zones. The weekly zones are published every Monday morning at 6:15 a.m. Eastern. When price rallies up to a weekly zone, we expect resistance till proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. So it's been resistance, resistance, resistance. We did poke through right here. And we almost made it up to the long target, which was based off the bearish cross from yesterday. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good resistance. So we're above the BBC, but we got a red candle. We're sitting right on top of support times 3. BBC, the step line, and blue and climbing. Now the pullback holds more often than it doesn't, but eventually it will trade through. So that's what we're waiting for right here, is to see, is it going to trade through and go back to the short target, or will the support hold and push us back up to the high of the session and ultimately up to the long target, which again is based off the bearish cross. That is such a reliable indicator. Make sure you watch for it. Here's the Dow. Here's where we opened last night. We consolidated along the BBC. Once blue and climbing turned to red and falling, we knew to look for lower prices. So it took us down to the weekly zone. And when price drops to a zone, we expect support till proven otherwise. So there's support. And then we jump down and we hit the short target, which is based right there where red turned to blue. Support sent us back to resistance at the long target, which was based off the bearish cross. See how that works? Resistance sent us back to support at the short target. We spiked it a little bit. In fact, this low here, it's just below this low from Friday. Okay, spiked it just a tad. And now we've made another run up, but it failed pretty quickly. So it looks like the Dow is going to head lower. It's sitting on top of support right now at the weekly zone, 46,510/515. The Russell. This was the open last night. This is the opening candle. Ran up to the BBC resistance, dropped to the zone support. Then we consolidated just below the zone, and then we made a run at the long target. We didn't quite get there. See, there's that same bullish cross that you saw on the ES. You saw it on the Dow. There it is on the Russell. The indices track each other very closely. And we've now dropped all the way to the short target and the weekly trading zone. Okay. And then we spiked the zone just a little bit. The zone is 32/33. This is 44/45, 58/59. I used to put the two lines on. Now I just put one of the lines on because we instinctively know that it's two numbers. Everyone who gets them Monday morning at 6, we've published them for the last 15 and a half years, a little over that. And once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. Now this low right here, okay, you see this low? Go all the way back to Friday. You see this bullish cross? That's where the blue line gets above the green line, and it led to an extended move. The first time price revisited that area, what did happen? The market found support. Wow. How's that possible? Well, I guess you have to just accept the fact that that's the deal. Support sends us up to resistance at red and falling, which has now sent us back down to the short target, and it looks like we're headed back to the zone at 32/33. The NQ. Here's where we opened last night. Bounced up to the BBC, which sent us down to blue and climbing, from resistance to support, back to resistance, back to support, back to resistance at this high from yesterday. And then blue and climbing turned to red and falling, and it took us all the way down to the short target, based off that low right there. This low right here, as you can see, is this low right here. And then we got to pull back to the BBC. We spiked it, but notice it's still touching. So as long as it's touching, pull back held. Now look at how many times we've bounced off the short target. In fact, we actually made it all the way down here. You see right here where the black step line crossed from the left side to the right side. That makes that an important price, important area. Right there, the step line goes from the left side to the right side. Now that happened back on Friday. It's really the Sunday night open. Yeah, it happened Friday. Okay, right into the close on Friday. Now here we are on Tuesday. And that little spot right there is that low right there. Over and over again and again. So support sends a market looking for resistance, which it found at the long target, which just so happens to be where the bearish cross was yesterday. Resistance sends the market back to support, back to resistance, back to support, over and over again and again. It's a never-ending cycle. Hopefully you can see that how learning to read the chart will make the business of learning how to trade simpler. It's like that good book, that page turner. In your mind's eye, you know, or you think you know what's going to happen when you turn the page, but nobody knows what's going to happen next in the market. I don't care what they tell you in their emails or on their websites. Nobody knows. No man, no machine, no algorithm, no AI, not nothing, not know-how. There's too many variables. Now you can guess, and you can be pretty good at guessing, but eventually guessing will come back to bite you. Here's where we opened last night on crude. We talked about crude. OPEC's going to pump more oil and ship it out, so down goes the price of crude. Remember, the oil companies need crude at $70 a barrel or better to be profitable. So the pullback held. We got a leg. The pullback held. We got a leg. The pullback held. And then we get a higher low. So on this pullback, we hit the underside of the short target. When you trade through a short target on the pullback, the underside of that short target will often become good resistance. Same is true of the long target, just in the opposite direction. So we're above the BBC. We got blue and climbing, chasing price. But we got some heavy resistance here. I would not touch crude on the long side until it gets up to about 63, 65. Gold. Now I'm looking for messages from Michael. I know we've had some issues with logging in of late. Let me look and see if he's in the audience. Nope, I don't see him yet. So he's just running a few minutes late. All right. So here's the opening candle last night on gold. And by 9 o'clock, we had hit the long target at 38.70. Now this candle here opened at 38.60. We'll call it 62. That's an $800 per contract move up to the target. Now right here, notice how the black step line crosses from the left side to the right side of blue and climbing. That's your first indication that there's going to be a pullback to the VBC. Blue and climbing also turned to red and falling, and down we go all the way to the short target and through the short target. We hit the zone and caught a nice bounce from 36 all the way up to 48. That's a $1,200 per contract bounce right there. This low, there you go. Support sends us looking for resistance. Now, we did have a bearish cross right here, and during the life of this 30-minute candle, we may have experienced some resistance there, but after the fact, it looks like it traded right through it, and it very well may have. Okay, nothing's 100%. When people start telling you something's 100%, you need to look at them funny, because they're probably more interested in your money than you are. Okay. All right. Still waiting for Michael, so we'll hit our last market, silver, and I'll go actually look for him. This was the opening candle last night, 6 p.m. Eastern. And by 9:30, we had hit the long target. You only need 2 pennies in silver to get your goal for the day. When the market finds resistance, it's going to go look for support. Pull back to the BBC held. Sent us back to put in a new high on the session, but it failed to take out this high from yesterday. You see that? This high was 47.41. This was 47.39. It's a 2-penny difference, but it matters, right? Because look what happened. Fair to take out that high. Blue and climbing turns to red and falling. Down we go to the short target. Okay, Michael just let me know he'll be here. Just a second. And down we go to the weekly zone at 46.17/46.18. I'm sorry, 46.17/18, right. Remember, when price drops to a zone, we expect support till proven otherwise. When we rally up to a zone, we expect resistance till proven otherwise. Once the zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. So we catch a bounce off the zone. We come back to test the zone one more time. Red and falling turns to blue and climbing right there. See, right off that low. That sends us back to the underside of the short target. Here it is again, okay? And it's good resistance, right? Sends price all the way down. Where? To blue and climbing. Red and falling is bearish, blue and climbing is bullish. So now we're just quietly consolidating above the BVC. Now, when we put in this high yesterday of 47.41, remember, the all-time historic high in all of history for silver is $50 an ounce. It's been there twice in history. Once in the 80s, when the Hunt brothers tried to corner the market. Didn't end well, they went bankrupt. And a few years back, of its own accord, this is the third run. We haven't got to 50 yet. Important prices, important areas are almost always tested. Hoping this time price will actually break through 50 and hold it on the pullback. All right, Michael is here. Now that little doji, that daily doji, we got some red on that doji. So we still have an inside day. So, or actually, yesterday's low was 96 and a quarter. Today's low is 93. So it's not an inside day. We did put in a lower low today, but the black step line served as good support. Okay, Michael's going to give us a recap of what happened this morning in the live training room. Do some trading on the TradingView platform.
All right.
And you opened up on a different screen for some reason, but that's okay. Now it's all ready. Looks good.
Okay. Good. All right. Here we go. Wow. 108. I am sorry about that. Good afternoon. I was looking at the clock. I was watching the clock. Just get my head into something else. All right. Good afternoon, everyone. Today is Tuesday, the final day of the quarter, final day of the month, the 30th day of September 2025. Now, if you have not taken a free trial with us, now is a great time to do that. Just go here to mytradingiq.com, click on the purple button. There is no credit card required for that trial. Click on that, and it will bring you to this page right here. On this page, all that we ask for is your name, your email, and your phone number. Down here at the bottom, give us your TradingView login ID. If you have one, give us your TradingView login ID down there. If you don't have one, click on this link right here and go get one. Okay? That is all you need to do with that. Now, I am 8 minutes late, so I'm going to kind of get through this. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the final day of September, as I said. We're up 124 ticks on the NQ, 44 ticks on the YM, 42 ticks on gold, and 16 ticks on the ES, putting us at 1460 on the morning session. Today took 6 minutes and 3 trades to get to the goal for the day. At that point, we're up $1,000 with 10 contracts. And we took 50 trades this morning. That was a lot of trades. Most of those are on the NQ, about half of them. 5, 10, 15, 20, 23. I think we're on the NQ. but that puts us, I'm going to finish up the month at $17,472 for 21 business days, averaging $832 per contract per 2-hour business day. On the year now, we're going to finish up the first 3 quarters of the year, $201,917. So 468 business days, averaging $1,201 per contract per 2-hour business day. Now, I'm curious. I just want to go see. Do this way so we don't have to scroll through it all. 130,000 last year. The year before that was a good one, I think. It was better. This is the end of this. 106,000. It's 2023. When did the Ukraine war start? Did that happen in 2022? The end of 238,000. That's the one I was looking for. 238,000. This is when it started right here. That's the number to beat. So I'm pretty sure we'll have our best year this year. All right. That's just what I was looking for. See, we're at 201,000 right now. Now, all that to say, if you were to quit trading when you get the goal for the day, so far this year, you would have only worked 23.15 hours. And if you worked your way up and you were finishing up with 9 contracts right now, finishing up this month with 9 contracts, going to 10 tomorrow, so far this year, you'd be up $138,947, averaging $6,002 per hour on the year. This was the number to beat from the 2420 blueprint. Now, on the year when we got to that number, yeah, when we got to that number, we had started out the year with 13 contracts to get to that number. This year, we started out with 1 contract to get to this number. So that's pretty significant that we're almost there, starting with 1 contract this year. Anyway, let's get into the trades. Start out with the gold. We just go right across them, okay? Start out with the gold and hit control and go back. Right. Here we are. So on the golds, we had a couple of break evens to begin with, and then our first trade that we took profit on, we got 25 ticks on this first trade right here. And then we had 12 more to get to 37. And then we had a break even. And I don't know how I managed to stop out on that, but I stopped out on that. I wasn't paying attention. So we went from 37 down to 22. We got 2 there to 24, and we went from 24 to 42. So we had 18, it looks like, on that one. Hang on a second. I have something going here on my phone. There it is. All right. So right here, we ended up going up to 42 ticks on that one. And we had a break even that followed it up right there. During the break, see, during the break, there was 1 right there, 1 right there, and that was not one. So that would have been an okay trade. That would have been an okay trade. This was not a trade here, and then we flipped to the downside. This was not a trade there. Flip back to the long side. Didn't have anything through there. To the short side, nothing. To the long side, nothing until right here. That would have been a trade. Now it looks like, depends on your fill. You wouldn't have gotten a fill any worse than that right there. So you would have been able to stay in that to get some profit, or at least get to break even. This would have been the next trade right here that gave some pretty immediate profit. Then, nope, going the wrong way, going the wrong way. This right here would have been okay trade to take. And this one over here would have been okay trade to take. I'm sorry, that's not. I take that back. That would not be okay trade to take. The reason it's not is because it's below the midpoint. Okay, it's below the midpoint. And that looks like pretty much it. Up until right here, this would have been an okay trade to take right here. You could still take it, as a matter of fact. if you wanted to. Let me see, I can still put that on. There, I just put it on. Here it is. And when that goes 5 ticks into profit, I'm going to bump the stop to break even. It's going to get up to 0.9. There it is. Stop to break even. Stop to plus a tick. Now the reason I took that is because it had not gone 5 ticks into profit, where I would have been bumping the stop to break even to begin with. Right, it had never done that, so I got it on the pullback right here. I grabbed it when it pulled back to here, and so we're out with just 1 tick of profit on that. Okay. If you would have taken it up here, you might have stopped out to the tick right there. You might be right here at break even again right now. But because I got it on the pullback, I was able to get 1 little tick out of it. Now, YM. So we ended the gold here with 42 ticks on the YM. On the YM, let's do this. Control. Here we go. On the YM. We started out right here on the YM with plus 10. Then we had a break even. Then we had 13 more to get us to 23. Another break even. Another break even. Then we went from 23 up to 28. So we had a 5 tick trade on that huge move down. And over here we went from 28 up to 30. So we had a 2 tick trade. And then we had a 12 tick trade there. I'm sorry, went from 30 to 32. So that was a 2 tick. Then no, I think that was 12 tick. We went from 28 to 30 to 32 to 44 is what we ended with. So this was probably a 12 tick trade right here. Now during the break, that right there would have been a trade during the break, and it's on, you know, it's got a green candle, but it was a gravestone doji. This right here would have been a trade. This one would have been good and profitable. This one right here might have been a break even, or it might have stopped you out. Depends what your entry was. This would have been a profitable trade right here. Going through the rest of it, this would have been a stop. That was not a trade. All the way over here. No. None of those were trades. And now you get to the bearish side. That's not a trade. This right here would have been your first trade right there. Would have been okay. That would have been a good one right there. Your next trade would have been right here. So you would have had 3 decent trades in this leg down. And that was it for the YM. Now on the YM, we ended with 44 ticks. Okay. Now the ES. Okay, on the ES. This first one here, we ended up with a break even. Then we got 1 tick there, another break even, and then 4 ticks got us to 5. Then 2 ticks got us to, and 1 tick got us to 6. Then 8 ticks to 14, and then 2 ticks to 16. And that is what we ended it on the ES this morning. Now, during the break, I'm looking right here was the trade right there during the break. It was a decent one. That one right there would have probably been a break even. It went 7 ticks into profit, but probably would have been break even for me. Maybe 1 or 2 ticks in profit. This one here would have been a nice trade. This one would have been 1 or 2 ticks in profit. That was actually followed up with this one right here. That would have been some kind of profit. Again, it went 7 ticks. This was a valid trade right here. Again, it went about 7 ticks before it pulled back, so that would have been maybe 1 or 2 ticks in profit. None of those would have been anything through there. Okay, and that was it on the ES. So we ended up with plus 16 on the ES. Now the NQ is where we had the majority of the trades today. So we'll scroll all the way back like this. Like this. All right. Started out with this one right here. Now this, I think it was right here that I actually, the trade triggered, but I took it from up here and I ended up getting a break even out of that. The next trade here on the NQ, we picked up 20 ticks on that one. Then I stopped out. That put us at -5. then it wasn't looking so good here. I got break even there, then I stopped out again, and I was at minus 30. Then I had a break even, another break even, another break even. There's another stop out in here somewhere. Okay, well, there's another stop out in here because I went from minus 30 to minus 55. I don't know. Maybe this was probably not supposed to be yellow. It was probably supposed to be a red one. Okay, because I ended up at minus 55. And then I went from minus 55. I got 45 ticks on that to minus 10. Then went from minus 10 to plus 35. So we got two 45 tick trades in a row. 1, 2. Went to plus 10. Then we had a break even there. I'm sorry, we went from minus 35 to minus 10, then minus 10 to plus 35. That was minus 55 to minus 10, then minus 10 to plus 30. That's what it was. Okay, and then we had a break even, and then we went from plus 35 to plus 80 right there. And then we went from 80 to 84 to 85. And then we stopped out. Went from 85 down to 60 right there. And then went to 64 and 68, then a break even. Then 96, then a break even. And then 100, and then 142, and then 149. And then we stopped out again. 149 was the high for the day on the NQ force right here. And then we stopped out again. We went down to 124. Had a break even. Then we stopped out again. And we went down to 99. Then we had a little win, got us up to 103. And then we stopped out again. Went down to 78. And then we got up to 94. Break even. And back to 124. So we had our fair share of stop outs on the NQ today, but we did have a whole bunch of trades on the NQ. Yes, it was. I think you were right there, Jeff. About when it started. It was the month after that we had our best month. Up until this year, we had our best month. Never. And then this year we had one better. I think the tariffs started in April this year. All right. Well, we're not really talking about apples and apples there either, because I guess we are. We're doing it per contract. I guess we are. All right. So anyway, back to what happened during the break. There was one short right here that worked out okay during the break. Then you would have been looking for long trades. There was one right here that worked out all right. One right here that would have been a break even. I'm looking for shorts again. One right here would have been a break even for me. One right here would have been a break even. And that was not a trade in there. That was not a trade there. Not a trade, not a trade, not a trade. That was a trade right there. That would have been another break even. That would have been a stop out. That was nothing. That was nothing. That was a trade there. That would have been okay. That was a trade there. Would have been okay. That was a trade there. That would have been okay. That was a trade there. That would have been okay. And that was it. All right. That was a lot of trades. So that brought us to 124 on the NQ. We were at 124 twice today on the NQ. 124, then we stopped out twice. And then we managed to get back to 124. So now, I don't have any trades on right now. What we'd be looking for is for this to get into the overbought down here and give us a short. This to get into the overbought. Now we need 2 bar lengths to get up to the overbought and to get into the overbought and to hit the midpoint. Over here we need 2 bar lengths here as well. Okay. So that's it. Oh, wow. That was a lot of trading this morning. All right, we're not really off the midpoint here, but if we come out of the overbought right now, if we get a down close and come out of the overbought on the NQ, if you get a pullback before it goes into profit, 10 ticks, you could opt. Okay, well, you don't have that option anyway. We just take the down close now if we can get it. Right, it's got a high here of 48.50, so it'd be 350 is what you'd be selling on that. Just like that. Okay, and there it is, and we're in at 350. Now we're going to get 10 ticks in profit. There it is, 10 ticks in profit. Now we'll lock in 4 and 8 and 16, and we're out with 16. Bang, just like that. That's exactly what you want to do, again and again and again. We need an up close here that will get us into the overbought, and then we'll need a down close after that. Okay, over here on gold, we just need an up close. It's going to low here 74, so if you buy in 75 on that, looks just like this. I'll do the window always on top. We'll stick it there. We just filled. I calculated wrong. What did I do wrong on that? What did I do wrong on that? We got in one tick too soon. It looks like 74 up to 75. Is that it's on a 9 range? Well, anyway, we're in. We're in. Now you should be in, and we are in. So it's a valid long trade. This is not a trade over here on the NQ because we didn't get into the overbought. This has to go 5 ticks into profit. It's got to get up to 75.4. Gain a bump. Now we could get into the overbought here on this bar and get an actual trade on the NQ on the next bar. You see how the bar kind of splits the midpoint right there? That means you get an up close on this and a down close on the next one. It'll be below the midpoint. Okay, gold's not looking so good for us right now, but wait it out. But you're right, Jeff. It was February 2022 when that started. And that created incredible volatility. That's when we switched. I don't know if you remember, but that's really when we switched off the 4 range to the 7 range on the ES. And we changed all the other things too. We went on the NQ, then we went up to a 50 range. Remember? When the volatility was just crazy. But were you around, Jeff, years ago when we did pretty much everything on the 4 range? And so with the 4 range, when you get 2 ticks in profit, you bump the stop to break even. Made for a lot more active trading. But there's something that we went over in a partners meeting a couple of weeks ago. We're going to stop out. And we stopped out on the gold. So we got some profit over here. We got to stop out there on the gold. There's something we went over in a partners meeting a few weeks ago about, I'll show you, if you weren't there, let me show you what it looks like. I got 3 things going down there. I'll show it to you on this. Put that on. And now let's go into the range trigger and shut off. In here, we'll shut off the retracement. Okay. So what I was saying in the meeting that we had is that you need to have volatility to do this thing. And so we looked at the 7 range, and there are times in the 7 range, if you have like nice trends like this, then this divergence type trade doesn't work. But if you have choppy periods like this on the 7 range and you drop it down to a 4 range, this was Dwayne's idea, and you drop it down to a 4 range, then you're going to still show that volatility in there. Okay, on a 4 range where you wouldn't on the 7 range, because all you're looking for is for the blue to lead into the overbought, and you sell the open to the next bar. The blue leads into the oversold, You have the blue and the black line. If the blue leads into the oversold, you buy the open of the next bar. If it leads into the overbought, you sell the open of the next bar. If it leads into the oversold, like this, you buy the open of the next bar. Right, like over here, you would buy the open of the next bar. Right here, you'd sell the open of the next bar. That's a divergence trade that I had done. If you look at the spreadsheet, I started this year with those divergence trades in January, February, and March. I used those divergence trades this year. You see how the numbers were? Now, I was able to do it on the 7 range then. I was able to do it on the larger time frames, but when the tariffs started, then the leg lengths were too big because the volatility increased dramatically in April, and the leg lengths got to be too big. The leg lengths got to be too big. So that's when I switched to the more conservative trades of having a commodity overbought, commodity oversold. Okay, just a little history. That was our best day of the year right there, I think. April Fool's Day. Anyway, I just wanted to show you that. It was something that we went over in a partners meeting a couple of weeks ago. I was committed to talking about the 4 range. And then I got to reminiscing. All right, so let's put all this stuff back on so it looks kind of normal. And there. Okay. It's time. All right, so I didn't realize I'd run over again. I am not just messing up with the clock today. All right, so if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required for this trial. Just click on that purple button, and it's going to bring you to this registration page. Just fill out the form. Once you fill it out, you'll be sent everything you need to get into the room in the morning and to get your indicators indicating, as long as you provide us with your TradingView login ID. All right, and that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay. Okay. There it is.
All right, recap of the morning session.
Today it took 6 minutes and 3 trades to get to $1,000 with 10 contracts on.
Good job.
Thank you very much.
Okay, guys, we made it through all the markets in granular fashion. If you missed any of it and you want to see it, in about 45 minutes, go to youtube.com/CFRN, and it'll be there waiting for you, along with its 2,900 plus fellow daily broadcasts. There's over 2,900 daily episodes archived at youtube.com/CFRN. So, we will take one last peek at the daily chart. So we got more red body. Now we had just, when we began the broadcast, we had just a simple little doji there. Price is dropping, and we're sitting right on top of support at the black step line. If we close today below the step line, below that black line right there, then the next spot for potential support would be the low of Friday, 66.53 then the daily BBC, and then 66.24 and then 66.08 and change. But keep in mind, lots of geopolitical tension. Unless they come up with a solution, the government effectively shuts down tonight at midnight. Trump, we talked about this at the beginning of the broadcast. Trump's been trying to get a deal done, and the Democrats don't want to do a deal, so if the government shuts down, well, they are going to have to own it. So we'll see what happens. We'll be talking about it this time tomorrow. If the government shuts down, the internet will continue working. at least for now. Might have to bring back AOL, who, as we mentioned at the beginning of the broadcast, after 35 years, ended their dial-up service. Last week, I think it was. 35 years. 35 years since you saw those little discs everywhere you went. Okay. To become a member, email Valerie, support@cfrn.net. Let her know you'd like to become a member. She'll send you all the information you need to get signed up. Once you get signed up, she'll send you more information. Some of it you won't know what to do with, but you're going to need it. So, whatever email client you use, create a folder, and every email Valerie sends you, just put that email in that folder, because you will need it as you begin your learning journey. As a passport holder, you're going to get 2 hours of live training every trading day. It's an interactive environment. 2 hours a day, every trading day. On top of that, you have access to private one-on-one mentoring. No extra charge. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames, just as I showed you today and show you every day. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's just how markets work. That's why it's so important to learn how to read the chart, so that as you turn the page, you know what to expect. And keep in mind, 20% of the time or less, it's going to be something other than what you expected. The purpose of the Logic 247 alerts, which you will get as a passport holder around the clock, they're created to help you learn how to read the chart, to have a very solid idea of what's going to happen as you turn the page. As a passport holder, you'll also get the concierge trade alerts, which are published typically 5 minutes ahead of the Globex Open each evening. God willing, they'll be on time today, 5:55 p.m. Eastern. Every Monday morning at 6:15 a.m. Eastern, you get the new weekly trading zones. We've published the zones now for over 15 and a half years. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. And every Thursday, you'll be able to join us for the members-only workshop at 8 p.m. Eastern. And last but not least, you get all the golden keys that open the private channels in Telegram. Everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for today. Yesterday we talked about get back up and keep going. Today, part 2. Micah 7:8. Though I have fallen, I will rise. One author writes, grit is passion and perseverance for long-term goals. It's a marathon, not a sprint. You're not just running, but getting hit along the way. Grit keeps you moving forward through the sting of rejection, the pain of failure, and the struggle with adversity. When life knocks you down, you may want to stay down or give up, but grit won't let you quit. True grit starts with knowing what you truly want. When you know what you want and you can see it, you'll work hard and persevere to achieve it. True grit is also driven by clarity of mind, purpose, passion, optimism, faith, love, hope, and, quite honestly, stubbornness. Knowing your why, refusing to give up, ignoring the critics, believing the possible, loving what you do, and showing up day in and day out keeps you on the path towards your vision. There's something inside each of us that wants to feel worthy and be someone of value. The truth is, not everyone will share your vision or believe in your project. But always remember that the circumstances around you and the opinion of others don't create or define you. Life is never created from the outside in. You create life from the inside out. The grit and spirit you possess on the inside will create the life you experience on the outside. If you have a vision, keep it alive. Remember your purpose. Show up every day and do the work. Patience and perseverance have a remarkable effect before which difficulties disappear. So stay on course and keep moving forward, and you will succeed. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.